So if you are, interested, then you need to go to the third. Cash flow is also important, but this is mainly for the external party. It shows the money inflow, money outflow for the period. All right, the solvency of the company. That means like, do you have enough money inflow, right? And then trying to to pay those money or those cash outflow. If not, that means you have to borrow, right? You are in debt. But if you have a very good cash flow, that means you can do a lot. Investment, buy fixed assets, invest in the research and development. Apple is a company with huge cash flow. And then now I don't know Tesla, but it seems Tesla, they also have a lot of cash flow. And then they started to, Elon Musk, right? He started to think about how to invest in the cryptocurrency. Let's say purchase the Twitter. They have some extra cash to spend. There are different, different versions, right? Pro forma, and then the actual. We have the beginning cash balance, right? You have the cash inflow, which is a plus, okay? And then you have, for the period, you have total this much, 345. And then you need to deduct the cash outflow. This is the pure financial statement. So they don't care about the operation, all right? They even don't care about the assets change or, let's say, whatever investment you did. They only care about the cash, the money out, in and out. So that's why I think this is less important. Me, myself, as the manager, I think I pay less attention on this one. There will be the net cash. That means by end of December, we have 120,000 in cash in hand. It is good because there is one of this minimum cash balance required, which is 100. The second month, we have the cash inflow, but we have a lot cash outflow, right? So that means that our net cash only 6,000. That means we spend too much or we paid too much money out. So we have to borrow. We borrow, okay? And then our debt, accumulative borrowing or accumulated debt is increasing until one day, until 1 month, we have the cash inflow, right? More than the cash outflow. And then we can pay back the debt, 451, and then the cash in hand, okay, or we call like the net cash increase, right? Ending cash balance back to 100, and then we still have some debt we needed to pay back. You will see actually the most important thing is cash inflow, right? Once you can maintain the cash inflow, that means it should be good. If the cash inflow always is greater than the cash outflow, that means healthy. How to calculate the cash inflow and the cash outflow? The cash inflow is not inflow in the months. For example, we have the sales, which is 160, right? But this 50% will collect by the month. There will be the 25% collected next month, and there will be another 25% collected the third month. So that means this is the credit policy, right? You will see we have the sales for that month, but we only collect the 50%. And then we leave another 25% to the next month. We leave another 25% to the next month. The bad thing is the cash inflow will be delayed, right? Another bad thing is customers failed to pay that money. Another table is some details regarding the cash outflow. The customer can pay us later. We can also pay our supplier later, right? For example, we have this, like we ordered, for example, February, we will have 320, okay? So that means we needed to receive, or we needed to order the inventory, right? Our stock, we ordered 240 in December, but we don't pay 240 in December. Actually, we pay 240 next month. Later, we order 240 this month. We receive the products, we receive the goods, but we pay the money next month. It also depends on the, let's say, the credit policy of our supplier, right? Actually, I can pay 50%. I can pay another 50%, right? In 3 months. But it seems our supplier required 1 month, only give us 1 month. Okay, in January, we let's say ordered 480, pay this 480 the next month. 320. This is the project sales in February, right? It seems we cannot order this 320 in February. We have to place the order in December, 2 months earlier. And then if we place the order 240 and then we receive that, this will be in the stock. The goods will be in the stock for 2 months. In the reality, you might need to order this 1 month early, or you can order 10 days early. It depends, right? Let's finish talk about this 4 basic accounting documents. Again, this is for you to, this review is for you to prepare us for our project.